Hi and welcome to Trade of the Week. This week I'm taking a look at poor old BP. I didn't make this short bet, but I'm showing how the chart introduced some clarity to all the media hype. BP's price had collapsed from 6.50 in April, but looked to be putting in a recovery in late May before being smashed back down again to a new low of 4.11. Once again shares tried to rally, but there were technical warnings that the move higher wasn't holding. Firstly, on both last Thursday and Friday, the rally ran out of steam around about the 450 level. Secondly, on both days the price showed no interest in hanging around at the higher levels and ended the day lower. And thirdly, Friday's move higher ended at the 50% retrace of Tuesday's high to low. This Monday the price made one further attempt to break above 450, but fell short of the previous highs. This now looked worth a short bet. The idea here would be to scale down to the 30-minute chart and to look for a reversal sign. My favoured strategy would be to look for a closing candle below the 21 period moving average, confirmed by an RSI reading below 50. Technically, the candle at 130 gave this, but with such a fine margin I'd have waited for the next candle for a stronger sign. The 2 o'clock candle confirmed the move, allowing a sale at 438 pence. The beauty here is that the trade allows a tight stop loss. 6p above Friday's high would give it a stop at 458 pence. And using my usual risk management calculation, this would have allowed a £10 bet size, given a risk of £200. I would have set last week's low as a sensible place to lighten the low, buying back half my bet at 412 pence, and then run the balance with a stop loss at break even. This really would have been a dream trade. It was all one way with no real reversals to question the trade. Shares ended the day at 429 pence, and then continued lower the following day, hitting my limit order at 412. Now with the stop loss at break even, and more publicity than Max Clifford could arrange, there was every reason to keep rolling the dice. The trouble is, as this is a hypothetical trade, there's the usual grey area about where I would have closed the bet. I could cheat and claim to have closed it out round about 350 pence, when Thursday's open undershot the lower Bollinger Band by 25 pence. It's all the way down here. But a more consistent approach of using a closing candle above the 21 period moving average, confirmed by an RSI above 50, would have been the one I'd really have used. And this would have closed the deal at 380 pence this morning. There. So our pretend trade would have made 26 points on £5 and 58 points on another £5, giving a total profit of £420. So it was possible to make money from BP on this side of the Atlantic as well. Have a good weekend.